We have a new episode of Global Ag Trade, brick by brick, right here on Connected Farmer, and I'm going to ask Mike Zuzolo what is going to happen in terms of acres in the United States when right after the tariffs are decided in the United States, and yet we are going to discuss South American weather right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Mike, welcome back. I'm happy to do this Global Ag Trade brick by brick again. We invite everyone to subscribe. We are getting frequent questions and comments on these episodes. And I'm going to start with the hottest issue, the tariffs. It seems that China is responding very quickly to the tariffs. Mexico is negotiating a lot more than all the other countries, and Canada is going as far as threatening to cut the grid, the electric grid, to the United States in some states that rely on the Canadian grid. So, what do you think is going to impact the agricultural sector? Do you think that will generate any changes in the acreage for corn and soybean?
The travels that I've had and the conversations I've had over the last 3 weeks with crop insurance decision making being done right now for the United States corn and bean farmer, Luis, it would suggest by and large, most farmers are ready to put more corn acres in. That 94 million acreage base that we received from USDA a week or so ago probably will go up if we stay dry in the major crop belt, which there is a potential drought that's starting to loom from Iowa all the way to central Indiana and into Ohio, even. So we're talking about some pretty big acreage that would also include Nebraska, Kansas, and parts of South Dakota for potential drought. So we're shaping up to have a very dry situation on our hands in planting. And so, if that's the case, because of the tariffs and because of the Chinese, and as you say, kind of allude to, the Chinese Canadians are kind of playing hardball with us and matching the US with their tariff policy instead of trying to negotiate. I think that's only going to create more desire by President Trump to push more tariffs out. And we actually saw that on Tuesday in response for Canada increasing tariffs on U.S. electricity coming out of Ontario. President Trump went ahead and went after steel and aluminum. And he's talking about really hitting hard on reciprocal tariffs of dairy and lumber. I think I've seen numbers of 250% tariffs potentially coming out, maybe as soon as this week, because he is very angry, it seems to me, based upon reports about what Canada's doing. You notice something that's happening right now, and I'll get back to your answering your question directly, but something that I think is interesting from the brick by brick mindset that kind of is the heart of this video podcast is President Trump and President Xi of China are taking a similar path. Philosophy, their short-term philosophy is I'll take on short-term pain in my country for long-term gain, and I'm not going to back down. And so this goes to history and the history of tariffs. The longer they go, the harder it is to unwind them because ideologies and philosophies get entrenched and businesses change their mindset and supply chains. So we really need to get this back to where we were in terms of a peaceful tariff drawdown and de-escalation of the tariff mindset. I'm still thinking the first 100 days of President Trump's presidency is a huge area that we need to pull these tariffs back. We're already through about half of it right now. So, with that in mind, I think farmers would be very willing to go harder on corn acreage, given the crop insurance price and given the dry weather. And so we could see that 94 go up to 94.5 at the expense of soybeans, maybe even dance around 95 million acres, depending on how dry we really are in April and May. That's kind of the feel that I have right now.
Yes, it seems that on one hand it's very dramatic that China is already imposing uh, tariffs to toward U.S. agricultural products. But on the other hand, it seems that the negotiations regarding the Russia-Ukraine war are evolving, and today even Ukraine is has started to accept the truce. This just broke as we speak, and Russia already stated before that they would open to discuss. So seems that in terms of inputs, uh, the input costs would lower in the coming month.
Yeah, I think the farmers are very well aware of that. And they're also very well aware of the world supply demand fundamentals. And we're talking after the WASDE report has come out for March. And it's interesting to note that, yes, we saw a nice decline in world ending stocks of soybeans down to 121.4 million metric tons. But that's still a modern day record of ending stocks going back to 1994. Whereas with the wheat and with the corn, we're still looking at 9 to 10 year lows in world ending stocks or world stocks to use ratios. And farmers in the United States know very well what's happening in the Black Sea as far as the drought potential in Russia, southern Russia, and eastern Ukraine's potential drought in not just winter wheat, but also they too are having a similar weather pattern heading into the springtime planting season for corn. So I think when the farmer adds everything up together with supply and demand and understands that, look at the product markets for soybeans. We continue to be punished by the soybean meal and now most recently the soybean oil taking a big hit because of the Canadian rapeseed price action and canola price action due to the tariff issues. And so the producer here in the United States, I think it's fair to say right now, understands that we're tight in world stocks of grains, very ample, if not burdensome, in soybeans. And our biggest buyer, China, in soybeans is probably going to go after as much Brazil beans as they possibly can. And the jury's kind of out on what the corn supply demand is going to be out of Brazil and Argentina. The soybeans, though, it seems like it's kind of coming in pretty hard, that it's going to be close to 170 in terms of a soybean production number in Brazil, and probably close to 49.50 for soybean production in Argentina. So all that together probably gives the producer more confidence to go after more corn acres if it's dry. The old saying is, if it's dry, in the springtime, then you're really going to see the corn acres really pop because the planters will just keep rolling more corn.
Yes, and you mentioned South America. Most uh, players in the markets have not changed significantly the output for South America. Do you disagree with that at this time?
I am hesitant to say that we can do above a 170 Brazilian soybean crop because I just read, and I was going to ask you this question. You just sent me a terrific South American weather update. I was going to ask you the question with Rio Grande do Sul looking like they're going to be at about 15 million metric tons for soybean production. That's 30% lower than last year. Makes me really wonder whether we're going to match that record yield of 3.6 tons per hectare that USDA is pushing for Brazil's bean production number, that it could be closer to 3.4 or 3.5. And, that would be a pretty substantial decline compared to what the trade is thinking right now.
Yes, based on previous years, I would agree with you that the production in Rio Grande do Sul would reduce to lack of moisture. But also, I don't think that there will be a significant reduction in Mato Grosso based on what has happened in the last several years.
Okay. Well, switching to Argentina on that same type of mindset, your same weather report, I thought you had a typo in your email. But before we went on air, I wanted to confirm it. But you're saying Bahia Blanca area of Argentina had 78 inches of rain in the last, what, week or 2 weeks? What was it?
Yeah, was the this weekend there was a major storm that generated a lot of havoc in that area that is very known for wheat production, but also it has some soybean production. Is but is the heartland of for wheat in Argentina.
So probably not going to disrupt the row crops too much. And is the wheat production? Do you think we'll lose bushels, or where are we on the
No,
harvest?
because the wheat has already been harvested at this point.
That's what I thought. Okay,
So there will be a reduction in soybeans, but not as significant because of the most of the core production is in northern areas.
okay, got it.
So, what's your marketing strategy considering all these tariffs and the risk of weather in South America?
Generally speaking, I still feel as though beans are the leader to the downside, Luis, even though our world ending stocks dropped below the lowest trade guess from some of the Newswire estimates on Tuesday's WASDE numbers. And I say that because the funds are now net short in soybeans. And I say that because Paranagua's price is below the U.S. Gulf of Mexico price in soybeans, while it's the reverse in corn. We're a couple dollars a ton underneath Paranagua when it comes to corn price. And so when I look at the product market, I look at the United States soybean price higher than Brazil. I look at the funds now being net short. I think the situation with Brazil being over 60% harvested and ready to turn on their export market to China in the next month or so leads me to think that the beans are, still clearly, very clearly the leader to the downside. So it's a question of whether we see the corn and wheat market bolster the soybeans. And if not, as the March soybeans go off the board, I think I'm going to be moving from around 50% plus or minus uh, of production hedged for 2025 soybeans up towards around 100%. While on the wheat, I guess I'm willing at this point to just sell off the combine and take my risk off the combine because of the dry weather scenario that the Southern Plains continues to look like. I just have a hard time selling wheat at this time of year at this price, given the very big question mark about the yield potential. Conditions are still very questionable versus last year. So I still think USDA is too high in the yield side. The last thing I would say is that the corn acres are going to go up, and that old saying is plant in the dust, the bins will bust. And I couldn't remember it when I said it the first time, but the old saying, if we plant more corn acres and the expectation that we're going to have really, really big yields because we're getting it in the ground early, I'll probably have to do something on 2025 corn, but I'll probably just do it on paper positions and not do a lot of cash selling unless I see rallies. So my hope is the second half of March, because the dollar is hitting a 5-month low, the wheat market looks like it could be in a weather situation. We get a good move to the upside and we can get some hedges made on profitable and higher values as opposed to having to play defense like we've been having to play this last couple of years.
All right. Again, if you are liking this podcast, Global Ag Trade, please subscribe to Connected Farmer. And also, if you want deeper analysis on commodity trading, you can sign up to the Global Commodity Analytics newsletter with Mike. So, how people can sign up to your newsletter, Mike?
It's very simple. Just go to globalcomresearch.com and there's a sign up for a free trial. It's globalcom with two M's, research.com. You answer 3 questions and we'll set you up with a 2-week trial and I'll get a hold of you once at the end of the trial.
Right. Thank you very much.